take allocate a particular portion. Step one, you've got an opportunistic bucket. You're stating that explicitly. You put a percentage aside that you're comfortable with. I suppose you'd also be able to rebalance that, back to so your balance between opportunistic and sort of the other systematic buckets that you might have.
Yeah, I mean, it might not be a fixed percentage. It might. So actually, let me go back to the unanswered question about COVID, because actually that's a really good example. Because with COVID, it wasn't so much the case that I had, I've got 10% of my capital here. I'm gonna put that into a COVID specific trade. What it was actually I have my normal kind of portfolio rebalancing process, but I wanted on top of that, pulling the lever mainly between equities and bonds, although also individually within asset classes as well. I wanted to override that to some extent to reflect the fact that I had basically had an opinion on the likely shape of market movements. So my main kind of input into my sort of long only asset allocation, bonds, equities, is a 12-month momentum signal. I knew that would be way too slow to reflect what was I could actually see happening, like coming in at me at 100 miles an hour. So the way I describe my discretionary trading ability is every 10 years and this has happened twice, so it's probably not statistically significant, but maybe every 10 years, if there's something really big happening, I seem to have twice now been able to catch the top and the bottom of that. Actually, 3 times if you count the tech boom in 2000. Although actually I had no money then to trade with, so I couldn't commit to that decision. So what I did last year was in February, I started pulling the handle on reducing my risk, reallocating from risky assets like equities towards US treasuries, and doing that in advance of my tactical asset allocation model. So I basically, let's say my tactical asset allocation model was going from, let's say, an 80-20 portfolio and was gradually moving down. I was accelerating that, but within limits. So I wasn't just, oh my God, the world's going to end, I'm going to sell all my stocks now. I didn't do that. I set myself a kind of a limit. So it wasn't a proportion of my capital that was my opportunistic bucket. It was a proportion of my risk allocation decision. And then on March the 23rd, I had this really strong feeling that we were going to go back up again, that we were at the bottom. I think I was one day out. So again, I accelerated I then switched the risk back into equities. And again, this was going against what my model would have wanted to do, because my model was using 12-month momentum that was still showing, a completely different signal. But again, I didn't go, I didn't pull the handle and go from 0 to 100 in one day. Right. It was a gradual reallocation, but it was just speeding up what the model would have done anyway. So it was essentially taking some of my system, taking that away from the system, allocating that to a discretionary risk management decision, but basically otherwise following all the rules of my system. And the difference between that and 2009 was I felt very confident in what I was doing, because I knew that because I was doing it in a size that I knew that the worst case scenario was if I'd made completely the wrong decision, it wasn't going to be the end of the world. I'd underperform what my system would have done anyway if I'd made the wrong decision, but it wouldn't have been dramatic. Conversely, of course, I didn't end up making a lot extra. So I probably made an extra 2% last year from that little discretionary allocation based on my whole portfolio size, which is better than a kick in the teeth. Yeah. But it could have been a 2% loss, which I would have been okay with.